lots of familiar faces coming up. So usual process here, just get some housekeeping in order. Drop, roll, cover, there's an earthquake in your own house. But really, our main advice now is put your microphones on mute and until you're talking. And if we lose connection through the webinar, don't worry, just go off and try and come back on. And if we lose connection, we'll go off and we'll all come back on. But otherwise, it should be okay. And of course, I know some of you are choosing not to go on video. That's absolutely fine. The reason for doing it on video is it creates a little bit more human interaction and gives us some connection. But it's perfectly fine to go off video too if you've got a low coverage too. And so if you're having problems, go off video as well. If you're those of you who are on video, the connection gets a bit funny. Also, as long as you're all okay with this, we are recording it like we do with all the webinars we've done, just because it's useful information for us to be able to kind of come back and kind of go over the insights from the webinar. So Craig, very grateful that you have agreed to come and talk to the whole sector. Craig Fisher will be known to many of you. He's well known in New Zealand as one of our most renowned, I kind of hesitate to call him a chartered accountant because he's so much more than that. He's a leading advocate really for good governance in the sector, for good management, and also a sort of future thinker about what the sector looks like. And he is, of course, the chair of Fred Hollows, so he's one of us as well. And we came up with this idea. We approached Craig because he was getting approached by a number of our members, many of us wanting to get some advice on how we cope during COVID-19. Could be questions about reserves, it could be questions about the wage subsidy, about how we do our reporting during this phase and beyond, that our whole year is being mucked up, and also how we cut costs, how we can think about the future in a sustainable way. So we thought, what better way to deal with this than to get Craig on, and he thankfully said yes. So how it's going to work is that we'll ask Craig to do a quick presentation of sort of around about 15 minutes or so. He's briefed on many of the issues that have come up from you and others in the sector, and then of course it will be thrown open to Q&As, to questions. So Craig, great to have you here, and look forward to hearing from you. So if you'd like to share your slides, we can get started. And over to you.
And now he's just looking to see how he can share his slides. Here we go.
I can tell a joke while you're doing it.
There we go. Can people see that?
Not yet. No. Let's try again. I think, Gaia, you've got the slides too, haven't you? So why don't we could try that from our end. Let's see if that works. This is like a perfect storm, isn't it? Of Zoom technology and PowerPoints. No. It's like...
Now trying to get out of it. There we go.
How's that working for you?
Let's not worry about the slides right at the moment. How about that?
Unless Gaia can get them up. Are you able to get them up, Gaia? Is that a try? But we could get started and something's happening.
Yeah. Well, anyway, while we're doing that, kia ora whanau, lovely to talk to you all in this slightly odd way. Just, I guess, a couple of disclaimers up front. I'm not a financial advisor. You have to be regulated and all sorts of things for those. These also are my personal views from, I guess, a number of different roles, being an accountant, being a board member of a number of different charities, and an advisor to many. And I'd also just preface this with the fact that please be aware that I'm a black hat thinker. I've spent 30 years as an auditor, which means that I'm trained to be a professional cynic and think the absolute worst. So when I look at problems, I tend to look at them often from a very black hat perspective, but that is actually a really useful way to look at issues because it enables you to see some positives in there as well. Auditors are also called into organisations generally to look at financial issues, financial problems. But one of the things that I've learned is that when you go into an organisation and start unpicking financial issues, they're just a symptom. The symptom is, the main problem is never the financial issues. They are just purely a symptom of other things, such as an unsuccessful business model, poor governance, poor management, a combination of all three of those things. And I think what we're sitting in at the moment is a really interesting, unprecedented time that's unfortunately going to expose a lot of those issues in organisations. So while we've got a very real health event and a very real financial impact from that, lots of organisations are going to thrive. Lots are not going to survive. And the difference will be those that have got their business model, their organisational model, in a strong, sustainable and resilient place. And that means dealing with change. So we are dealing with a lot of change right at the moment. What are we facing here? Actually, Gaia, if you've got the slides up, maybe push those across to the next slide, if that's all right. We're facing a very big economic downturn. Okay, don't worry about the slides. And what's really hard about this economic downturn is it's completely uncharted territory. We've never had anything like this previously. There's never been anything which has had the same dynamics of this in such a globally connected world that we now operate in. So we really are in uncharted territory. But there's a lot of very intelligent minds being applied to this, and unfortunately, we are going to see some considerable downside. Now, I don't know if many of you have had a chance to read through the Treasury report yesterday. Their scenarios on best case, worst case, and these are some very bright people in Wellington. But I was a little bit concerned by some of what they popped out. Firstly, in terms of unemployment, which I think is a really big risk for New Zealand. Best case scenario, 8.5% unemployment, so that's over double what it is now. Worst case, 23.5% unemployment, nearly a quarter of our population unemployed. And unemployment is a really big issue for us coming out of this. This is not some sort of quick share market crash and bounce and we're back again. If we have a large number of the population unemployed, that's going to have significant economic and social disruption implications. But for all charities, what it's going to mean is that anyone that's got any cash is going to sit on it. People are going to be a lot more conservative. You're not going to buy that new car. You're not going to go out to a restaurant. Unfortunately, people are going to make some of these decisions also around their charitable giving. And that's hard, but it's a reality that we're going to face. I think it's important to also understand the New Zealand context. If you look at our economy, we are a pretty farm. And by that I mean our two main drivers of the New Zealand economy are, or have been in recent years, tourism and agriculture. Pretty being a nice place to visit, farm being the good place to grow things. The pretty part is going to stop. So we are unlikely to see tourism happen at the levels that it's been happening for quite some time now. And this is not just a quick bounce. We have currently in New Zealand around 300,000 people employed in tourism directly. That's a lot of jobs that are going to be under extreme pressure, and that's just one sector. So, if we've got zero tourists, if we've got zero foreign students, if we've got zero inflow of temporary workers, and we've got zero net migration, which is a traditional driver of growth, all of those things impact our labour market and our housing market. And unfortunately, the outlook for those doesn't look good for the next 12, 18, and possibly even 24 months. So that's a very negative view, but I think it's important to be realistic around what we're likely to face. we also, I think, need to be realistic that this close down, and Treasury pointed this out very clearly yesterday with their scenarios, so this lockdown that we're currently experiencing might just be one of a number that we have to face. And one of Treasury's scenarios looked at another 4-week lockdown in September, for example. So that could have a really serious operational impact on us. Looking internationally, the OECD have said that New Zealand could see a 30% drop in economic activity, and more than a lot of other of our peer countries, because of our reliance on tourism as quite a major driver and our isolation. So this economic impact could be existential. It's probably the biggest since the Great Depression, and assuming that we're going to go back to business as usual is a very dangerous assumption, in my view. I don't believe we are going to go back to a business as usual. We're going to go back to something else. And there may be some really good positive things out of this. In fact, I definitely think there will be. So that's what we're facing, something that's fairly serious. What are the immediate impacts on your organisation, and what do you need to do? Well, firstly, I think every organisation needs to look after its people. They are our biggest resource. That's a comment that's almost tritely trotted out from many people in terms of people, but actually looking after our people is looking after our organisations. Our organisations are nothing but a collection of people. So it's really important that we can do that as much as we can. The financial piece, cash flow is absolutely critical. Hopefully you've, and all your organisations have been taking a very close look at your cash flow. And I think it's important that people are speeding up their internal accounting processes. For the boards that I'm involved with directly, we're having weekly or 2 weekly meetings with members of the board and members of management looking at where things are up to, how we're going. So we've sped up the process considerably from, in one case, a quarterly meeting to now 2 weekly. And that's appropriate at the moment. We need to be right on top of what's happening because it's changing quite quickly. Cash flow is the real king here though, and I think it's important to remember this. Someone once gave me a lovely analogy for cash flow, which was profits like food, cash is like oxygen. You can survive without food for a little while, but you can't survive without oxygen for very long. And that really sums up a lot of organisations. We're in the charity sector here though, and that's interesting because charities can survive longer than a lot of corporate organisations can. And we've seen this time and time again where there's been economic shocks, that the impact on charities, although it's feared to be great, doesn't come through as harshly sometimes as it does on corporate organisations. As an example for that, in my accounting firm, when we went through the global financial crisis, not one of our charities went out of existence. Quite a considerable number of our business clients disappeared. So people will support charities for longer, but put that in the context of people under pressure themselves, and we need to have very good stories, very good, clear reasons why people should actually support us. Hopefully everyone's looking at their financial levers, and when you boil all the accounting down to it, it's relatively simple. You've got income coming in, you've got expenses going out. So your income is already dropping, I'm suspecting, across the board for just about everyone here. And hopefully you're looking at your expenses and have worked out what you can cut, what is absolutely essential, what's nice to have, what's discretionary, and are making appropriate cuts where possible there. Unfortunately, your assets are going to diminish in value somewhat as a result of this as well. Property normally in a big economic event like this goes down. So if you've got property holdings, you'll find the value of those holdings will decrease. It'll take some time, but it will go down. A lot of organisations are looking at debt now. Should we actually borrow money? Do we have the ability to borrow money? I'd suggest great caution in doing that. because one, the value of any assets that you have is going to diminish against which to borrow, and the access to funds will be getting tougher, and whether it's actually wise to borrow in the current climate is another interesting point. Government subsidies, reserves. I know this is a hot topic at the moment. Sorry, if we go back to that slide, thank you. Our government has done, I think, a very good job of jumping in and providing some immediate short-term relief. They've thrown a significant amount of money at this issue that we're all facing, and we should all be very thankful for that. We do, however, need to remember, though, that we are the government. The government really is funded by taxpayer revenue, and it's really the money that is being thrown at this particular issue is the money of our children and of our grandchildren, because it's going to be borrowed in the most case, and we're not finished yet. There'll be a lot more to be borrowed into it. So there's some subsidies out there, and that's great. I know that the wage subsidy has had a lot of attention. There was firstly concern in the sector that it didn't apply to charities because it was just talking about business. That was clarified a week later that yes, it does apply to charities and not-for-profits, which is fantastic. But I do have some concerns with the wage subsidy, and my primary concern is around the statutory declaration that you sign when you are actually applying for it. So most people have focused on the eligibility criteria being your income needs to have dropped by around 30% in order to apply for the wage subsidy. However, that's only one criteria. There are other criteria as well. And if we go, sorry, back to that slide, back for the, one of the bullet points partway down that page I've highlighted, which says before making your application for the subsidy, you have taken active steps to mitigate the impacts of COVID-19 on your business activities, including but not limited to, sorry, I just need to get to it myself. Not limited to engaging with your bank, drawing on your cash reserves as appropriate, making an insurance claim. Now, this is a statutory declaration that people are required to sign off. And while the government departments have been exceptionally good at providing access to these subsidies rapidly, I am concerned about the flow-on impact of this. And I'm aware that quite a number of charities have applied for and received this wage subsidy when on their balance sheets they have quite considerable reserves that they have there for a rainy day or for specific projects. My concern is if you've got a rainy day reserve, well, actually it's probably raining now. This is probably the time to actually start using that reserve. And as an auditor, I spent about 5 years after the global financial crisis involved in litigation, involved in court cases, going back over what happened during the crisis and how organisations failed and how people lost money. I have a real concern that we might see some considerable time of activity after this when the subsidies are looked through and people are going, well, hang on, why did this organisation that appears to be rich on paper apply for a wage subsidy when it was there to help organisations that had no other choice? It was the point of last resort. Some of us in the sector have been trying very hard to get clarity around the statutory declaration. We haven't as yet managed to get there, but we have people in charities, services and others working on this, still trying to get some more clarity around it. But my advice to organisations that have reserves is that if you have reserves, you need to think very carefully before applying for the wage subsidy. I would hate to see you in a situation where you have to repay this subsidy later on, or possibly even worse, are called out by the media in terms of why is this apparently rich organisation applying for a subsidy that was there to support things that were absolutely desperate. So yeah, a word of caution around the reserves. key point in terms of reserves and your financial statements is you should have clear disclosure around why any reserves that you have exist and what they're going to be used for. Reserves, even before this issue, was starting to be an area of some focus in the charity sector, and some donors and other commentators looking at organisations with reserves going, hang on, why should we donate to you if you've got a whole pot of money sitting there? What's that for? So do be aware of that. Other implications for your annual financial statements, any organisations that are in the process of preparing those at the moment, things that you need to watch out for. Your auditors especially will be very interested in your going concern assumption. And the going concern assumption is the most fundamental assumption in any set of financial statements. It's the assumption that has a lot to do with the value of all of your assets and of your liabilities. So every set of financial statements is prepared on the basis that the organisation expects to carry on and that you expect to be able to earn some more income in the future, and you expect therefore to be able to pay for your expenses. If the going concern assumption is in doubt, then it has dramatic impacts on your assets. For example, if you have to sell a property asset in a hurry, in a fire sale, you'll get a lot less for it than you would if you could sell it in a normal long-term situation. So if the going concern assumption is called into question, then the value of your assets are called into question. Likewise, you might be exposed to more liabilities, such as redundancy for employees, other liabilities that may not ordinarily kick in. So be very aware of that, and if you're audited, your auditors will be very interested in your going concern assumption and how you believe as an organisation that you will be able to keep going and what your basis for that is. And there's no magic answer to this. It's about explaining your rationale and logic and the projections and forecasts that you've done and the assumptions that you've used, and how that's actually demonstrated to people. Just moving on to the next slide, I think what this whole experience is also doing to organisations is an existential question of why you actually exist as an organisation. Here we are, all of us sitting in our living rooms, and yet most of us, I'm sure, have had very productive days today. I know I've been involved in 3 different meetings. That's really good, but I'm not working from my office, I'm working from my home. And you know, how we do things has changed. The important point of this is that how we do things going forward is going to change as well. And as organisations, we spend a lot of our lives very much focused on the what and the how we actually do things. We don't always, or I don't think we ever focus enough time and energy on the why we actually exist. And I think what we're going to see with this crisis is 10 years of pressure on organisations being condensed into 1 year. So any organisation with a weak business model is likely to have that exposed. You know, Warren Buffett made that lovely saying that it's only when the tide goes out that we get to see who's swimming naked. Well, now we're actually going to go and see who's swimming naked and whose business models are actually going to stand up to this. But it's a really good time to actually pare back to the essentials. Why does your organisation exist? What are the critical things you have to do? And what are all the other things that you've got busy doing over the years that have all just built on each other that may not actually be critical, that may not be core to your purpose and to the most impact that you can actually create? We're very good as human beings at creating systems and perpetuating those systems. Now's a really good time to actually look at a lot of those systems and see what's essential, and can we do things differently? Can we do things in a better way? Can we collaborate more? Do we even need to be a separate organisation? Or actually, are there a number of organisations that could get together and do this better collectively? And I realise that's a very challenging, confronting discussion to have, mainly because turkeys don't like voting for Christmas. We all have our own particular spaces, and we're used to those comfort zones. But I think what we're going to find now is that comfort, in a lot of ways, is being thrown out of the window. So it's a good time to really focus in on what's essential and how we're actually doing what we exist for. So how about, Josie, we throw this over to some questions? I know that's a very broad trip across a few different features, but I'm interested in taking questions for people.
Yeah, that's a fantastic summary of the short-term urgent crisis we face, but also the long-term challenge of rethinking how we might get rid of what's not essential and be more effective potentially by working together. So I'll throw it open to questions, guys, if you want to raise your hand or turn your mic on. It's always strange not being able to see people, but I know there will be questions there. Oh, did someone speak? Oh, that was you, Craig.
I think someone's added one on chat.
There we go, Paul Brown. Oh, okay, I'll have a look on chat. Thanks, guys. Paul, do you want to chime in? Don't forget to unmute yourself.
Yeah, thanks. Hey, thanks, Craig. All good practical advice. Sort of a left field question, which is in the chat box. It's a difficult time for all of us, particularly in non-profit land. Do you think our auditors will be a little bit kinder to us this year in terms of fees?
In terms of fees, Paul? Is that the question?
Yeah, not in terms of service, but in terms of fees. I think they'll be as prudent as ever, but you know, it's now a good time to say to our auditors, hey, come on guys, your fees have been a bit steep and getting steeper, or is this a plug for RSM?
It's always a good time to say that to your auditors, Paul. I think that's an appropriate discussion to have. One of the challenges, I think, for auditors, and I guess just sort of defending the profession slightly, is that their workload, I estimate, will go up by about 30%. And the reason I say that is because audit is a function of time. So the audit cost is a function of how long it takes the auditor to get comfortable enough to be able to sign an opinion on the financial statements. Whenever there's uncertainty, it takes more time. So we're faced with, unprecedented uncertainty. That uncertainty impacts financial statements. So, for example, your certainty of future income is going to be at question. Your certainty of a lot of the assumptions that you make in the financial statements are going to be questioned. So unfortunately, that will require the auditors to take a bit more time to actually look at those uncertainties. What I would suggest is that the last two things that I mentioned, the going concern assumption and subsequent events notes, those two things, if organisations can think about those themselves, then that will help the auditor assess whether they think that's reasonable or not, rather than the auditor having to come to an organisation and say, hey, have you thought about going concern? Have you thought about a subsequent event note? Where is it? And help educate people for them, which takes more time. So yeah, bit of a catch-22.
Okay, so just Craig, just going a little bit further on that, auditors are typically historic, so we bring them in at the end of the financial year, or if the situation's gone bad for a forensic audit. But are there any signals that we should be looking at? And I know it's not this simplistic, but rather than waiting for it to be too late and they become casualties in our sector, are there some things we can monitor or ratios we should be keeping an eye on today that says, actually, you need help now and you need to start talking with one of your colleagues to start collaborating today, rather than waiting 3 months and going, oh shit, we have to close our doors? Is there something we should be monitoring right now?
Yeah, you're right, Paul, about auditors being historic. And there's a lovely saying that auditors come in after the battle has been fought and bayonet the wounded, which basically is saying that, you know, they're looking at what's happened in the past with the value of 20/20 hindsight, which can be a frustrating experience. What you can do today, and it's something I've already alluded to, is you should be right on top of the drivers, the economic drivers of your organization. And you should be on top of those drivers on a more timely basis than you would normally be in a period of calm business as usual. So, you know, where an organization might have done a budget and it might reforecast 3 monthly or 6 monthly, I'd expect it should be looking at those key assumptions in its reforecast on a monthly basis at least. And the biggest uncertainty that the auditors will have will be around the going concern assumption and whether organisations look like they have the balance sheet and the income earning capacity and expenditure control capacity to be able to survive into the future. So the more that you are on top of those things internally, the more it can be easy for auditors to come in and look at that externally. But actually it's important, I think, or it's going to be increasingly important, not just for auditors, but for all of your stakeholders. Because one of the concerns that a lot of donors have is funding an organisation that might not exist in the future, that might not be able to stay around. And I know there's a catch-22 in that obviously if you don't get funding, well, you probably won't stay around. But there is a fear from funders, especially from larger grant funders, of funding organisations that may not be in existence to be able to deliver on what that funding was for. So being able to demonstrate to people, and whether it's via financial statements or otherwise, that you are on top of your organisation and have a good handle on the financial levers should hopefully be able to build confidence for them.
Craig, I've got a couple of questions lined up here. I've got one, first of all, on reserves and the subsidy issue, and then to John Loof, you have a question too, and then Jax. What I suggest we do is get all three in a row and then get Craig to answer all three. So, Jay Jones.
Hi, Craig, how are you?
Good, thank you.
Good. Just following on what you were saying about the wage subsidy and the reserves, I am in the same boat as you. I just wondered, if you do have reserves and they aren't specifically tagged, would there be any reason why you would justify applying for the subsidy?
It's a really hard question,
show your
that one.
cash is going to be used, you know, in short supply or in quick time.
Yes, I guess the challenge is, should you be looking after yourself first, or should you be calling on everybody else to look after you first?
Yeah.
Which is a really interesting ethical conundrum. Yep. And I guess I pair it back to the policy rationale of the subsidy. The subsidy is to save employment when there is nothing else available to save that employment. And I struggle ethically if I look at an organisation and see that they've got a decent sized bank balance, but because there's a subsidy there, I'm just going to jump in and apply for it.
Totally.
And especially when that subsidy, you know, we look at it as coming from the government, but actually the government is just us. The government is collective us. Yep. We are government. We are paying for this. And it seems to me somewhat unethical and slightly unfair for those that can afford to survive without it. Jump in and apply for it. I also understand there's an argument in terms of, well, hang on, it's available for all, so why shouldn't everyone jump into it? But I think, you know, if I was asked to look at this with hindsight, and I'm asked to look at two organisations, one that had absolutely no other way of surviving than applying for the wage subsidy, and one that had $1 million in reserves and didn't use any of that. As an independent accounting person,
Yep.
I'd say, one of these doesn't really look that valid compared to the other one.
Yeah.
Thanks, guys. Craig, we've got a question from John Loof, and then we'll go straight to Jax and then answer those two. That would be good. So, John, if you want to fire away.
Hi, Craig.
Hi, John.
Himalayan Trust. Look, we've really taken on board your comments about focusing on absolute core activity. And, you know, we're looking at how that can be funded from reserves, because, you know, fundraising opportunities are going to be quite minimal in the next little while. If you're not careful, though, you very quickly and slowly slide into some kind of hibernation, some kind of state where, you know, you're letting people go, there's not enough activity, and, you know, the organisation really does sort of grind to a halt. And I guess I'm interested in your thoughts on really what are the true costs of that in terms of how you might restart your organisation in 6 to 12 months. Because, you know, not the least of which, if you have to let people go, then, you know, there's a huge opportunity cost in finding new people after a period of time and all the rest of it, even though this can sort of seem to be a bit of an attractive option to board members.
Also, wouldn't mind hearing a definition of hibernation, because it's something that's coming up a lot, and quite what it means legally as well. Jax.
Hi, Craig. Thanks very much. Really, really interesting. It's just something you mentioned earlier about governance and boards. And I'm just wondering, what's the most practical thing a board can do to support its organisation in times like this? And what would we see, I mean, ideally, what would we see differently from boards than we would have seen in normal times?
Yeah, thanks, Craig. Yeah, go for it. Answer those two. You're a hero.
Both very interesting questions. I'll answer the last one first, or I'll attempt to answer the last one first. It's really interesting. I think this is going to prove the mettle of many boards, and will also highlight some as having the emperor's new clothes syndrome. And that really comes back to what is the point of a board and your understanding of that. My understanding of the point of a board is it is the steward of the organization's mission and raison d'etre. It's the keeper of why the organization exists. It's there to be a critical friend to management, and both of those words are equally important, critical and friend. And at times like this, possibly need to be a little bit more critical in some respects and a little bit more friendly in others. So what can a board do in times like this? I think firstly, it definitely needs to step up. It needs to be more involved. And, you know, there's always the mantra of boards that it should be noses in, fingers out. And I'm a great believer in that mantra, and except when the case of fingers absolutely needing to be in. And this is one of those times that it might be useful for management to be able to tap the skills and experience and resources around the board table a little bit more proactively. If you're not already getting that from your board, then I would be suggesting that management needs to be looking at what resources are on the board and what skills are there, and are they utilizing those fully enough? And likewise for boards, you know, I've been involved in quite a lot of war rooms recently, and that's how I describe them, because this is crisis management. This is looking at, can this organization still exist, what we need to do. And that's, that's really important.
Sorry, Craig, can people mute their mics, please, if they're not talking?
So as a practical thing, Jax, I would hope that your board is more proactively involved at the moment, and that the resources are being utilized better. I think it's also it's incumbent on boards to be objective about this still, and I know that's a very hard thing to do when you're in a crisis situation, but this sort of leads actually to John's question then. And if I sort of pull your question apart, John, it sounded like, hey, when's the right time to say enough is enough and to stop this, or put it in hibernation? And that's actually a really valid question. Sometimes it is better to put something in hibernation and not doing anything, rather than just fritter money away trying to keep something going that's not actually delivering impact. And that's the word that I come back to the most, which is the organisation still delivering impact? And is that impact value for money? That's got to be a driver of decisions around should something go into hibernation, or should it not exist completely. I had a delightful discussion last week with an 85-year-old philanthropist from the United States, and it was delightful because he's come to the conclusion that actually he needs to shut his organisation in New Zealand. And that might sound really negative. Actually, it's going to be positive. New Zealand's going to get more economic benefit from his charity input, because he's not going to spend some of that on compliance costs of keeping something going which wasn't really delivering a lot of impact itself. He can do that from his United States Foundation. So sometimes, these things can force hard decisions, and one of those decisions should always be, does our organisation still have the right to exist? And if you're a charity, that right, I believe, comes from, do you have a valid mission of doing good, and are you doing enough of that effectively and efficiently?
Yes, very challenging, Craig. I've got a question also from Nick Borthwick from MFAT, who's raised the a question about the GFC, and did you see that donations during the GFC decreased, and what are the relevant lessons that we might be able to take as a sector from that? Yeah, I mean, I know that donations were affected, but have you quantified it in any way, and what were the lessons learned from the GFC? Good question, Nick, thank you.
Yes, very good question. There was some quantification of that. I don't have that to hand, sorry. I know in my own organisation's experience, it was really interesting because we had unmitigated panic. That's probably the best description from most of our not-for-profit and charitable clients, that this was going to kill them. And a lot of that panic was unfounded. It certainly had an adverse effect in terms of funding just about across the board did decrease, but it didn't decrease completely. It didn't decrease to critical levels. So while there was a decrease in funding, the generosity of New Zealanders was still very much to the fore. And we're a little bit interesting as a country. If you look at our charitable giving in New Zealand, our charitable giving largely comes from individuals and large foundations. We have very little in the way of corporate charity, which is completely different to a country like the United States, for example. The beauty of having lots of generous individual New Zealanders is you have a large cohort giving a small amount, which generally diminishes less than one or two very large donors stop in. If you can see the logic there. What does concern me the most about this particular financial crisis that we're heading into, or that we are now in, is the unemployment piece, because I think the biggest impact on New Zealand and economically is going to be the increased numbers of unemployed, and therefore the impact that will have on individual New Zealanders. The information that I'm seeing from philanthropic bodies is very positive. They are definitely going back to learnings from the past and how they can best help organisations. And I think we're already seeing some very positive things come out of that. So I'm heartened by that. But it does concern me in this one that it is not the same as the GFC. I think this is going to be somewhat worse than the GFC. in terms of the impact on funding generally, which again comes down to the really uncomfortable discussion around, do we have too many charitable bodies in New Zealand? And you know, this has been a pet topic of mine for years. We are exceptionally good in New Zealand at creating small charities, and we're exceptionally good at creating and keeping them small in the main. So, you know, we do have scope for some rationalisation, and I know that a lot of people sort of take that as a corporate antichrist in terms of using words like rationalisation or consolidation.
At least you didn't say mergers and acquisitions.
Indeed, yeah. I'll keep away from M&A. But it's a reality. You know, if our goal is to provide the most impact, then surely it's incumbent on all of us to look at the most efficient and effective way that we can provide the most impact. And that means change.
Craig, I've got
Thanks,
asking,
very compelling, thank you.
Anyone else who's got a question, please raise your hand or butt in. In the meantime, I have a couple of quick questions. I know that the JB Ware report showed that we have a very heavy dependence on public donations. Clearly there's an untapped philanthropic dollar out there for the international NGOs. What would be your advice to INGOs about tapping into that philanthropic dollar, or also the corporate partnerships and the corporate dollar that goes beyond corporate social responsibility?
Wow, that's a small question, Josie. I'm not a funding specialist, but I am an interested observer in funding. I guess it depends on what your organisation is doing and what your key unique features are. And I think there's no way that you can throw a blanket answer over that particular question. Certain types of organisations will attract certain types of donors. You know, I'm a trustee of Sustainable Coastlines. We attract young environmental warriors and older ladies that would like to vote Green but got a bit disappointed with the Green Party. And I'm being, you know, callous in that description, but we need to know who our brand resonates with in order that we best target them and get funding from them. You know, that's completely different to the Fred Hollows Foundation, which appeals to a different demographic completely. So I think the first thing is to be really clear on what is the demographic, or are the demographics that your particular brand of charity and service appeals to, and therefore go looking at those. If I look at where the dollars are in New Zealand, the dollars are at the moment in the boomers, the older age group, because of property value. You know, organisations that are getting good levels of bequests are doing very well in New Zealand at the moment in the main. However, that's got a distinct time frame on it, and it will be very interesting to see what happens over the next couple of years to bequests when, one, the value of our properties decline by whatever percentage they're going to decline by, and families start having more concern for younger members of their own family, perhaps, who may be unemployed, or have less job security, then they would feel generous towards other charities. So I think, you know, that demographic may change somewhat. We're in a really unique position even before this COVID thing, where we had government looking at well-being budget and looking at making policy decisions on a much more holistic basis. We have the top end of corporate town doing integrated reporting, which is basically trying to report on their business model and why it should be sustainable. So looking at what impact they have on not just the profit they make, but also what the impact they're having on the environment, on the social, and the rest of it. And then we have service performance reporting happening in the charity sector. So for the first time, we've got all three sectors in New Zealand looking more towards impact. And I think that's a big untapped opportunity still. And again, if you're very clear on what's unique about your brand and your particular flavour of charity, then you should be better placed to go out and appeal to those organisations and those individuals who will be more open to you. So, you know, I think we'll see more corporate partnerships because of the social license of corporates coming more to the fore, and corporates realising that they need to actually have more of a social license to operate, and therefore sensible collaborations where they can really show meaningful impact with organisations that are logically aligned makes a lot of sense.
Craig, we've got one question here about another one on the wage subsidy, and here also a little bit of event. Could you give a little bit more on what subsequent events notes will need to cover? Rob, do you want to explain that a little bit more? Because I'm not sure I understand that question.
Thanks, Josie. It was just a question for Craig, really. I don't have a great deal of experience with subsequent events notes. I'd love to learn a little bit more about what they might need to cover in this current environment.
Great.
And,
Thanks, Rob.
just before you answer that, Craig, there's one also you could answer at the same time on the another one on the wage subsidy. That should it first be a liability and then only be recognised as revenue when the wages are actually paid? And what does that mean for the enforceability of it? I think I've summarised that.
Good summary there. Actually, that's an interesting sort of middle ground, and that's a discussion that actually we're having with the Fred Hollows Foundation today, is that if one was to apply for the wage subsidy, do you then treat it as a liability until such time as you pay it out? And that way, you're effectively cutting yourself some more time to see whether or not it is valid for your organisation to be actually applying for it. To me, the bigger question is still the more fundamental: should you be even going there in the first place? If you are going for the wage subsidy and have some concern about whether or not it will be applicable for you, well, you might want to try and treat it as a liability and yeah, cut yourself some more time with that. I don't know if I've explained that
yeah.
Well.
And the events notes. Rob's question
Sure.
on the
So,
events notes.
Subsequent events, the whole concept of a subsequent events note is that a set of annual financial statements is a picture of your organisation, a financial picture at a point in time. So let's just say for instance, that 31st of March is your year-end date. What you're looking at providing with your 31 March year-end financial statements is what assets and liabilities you had as at 31 March and what the year's results were up until 31st of March. However, if significant things have happened after 31 March, because there'll probably be some time before your accounts are actually prepared and finalised and audited and signed off, it's useful to update the world by putting in a subsequent events note, just pointing out if anything significant has happened since the year-end date that might change a reader's view of that year-end picture. So let's go back to that 31 March situation. 31 March is your year-end, and since then we've gone into lockdown and our income has declined by 20% and whatever else has happened. It would be very sensible for the organisation to put a note briefly explaining what has actually happened of significance since that year end that may impact someone's reading of your financial statements.
Craig, I've got one last question, and I think then we're up to the hour, so unless anyone's got an urgent question, please let me know. But my last question is to sort of take it back up to the big picture stuff. Have you got any examples of where there have been successful mergers of organisations in New Zealand, or even sharing of back office services? Any examples that come to mind?
Yes, there are some examples out there. One which we even documented years ago was an interesting one. It was a couple of Alzheimer's organisations, and one was bigger than the other one and had more resources, therefore had a better accountant and better database system and all those sorts of things. And they used to provide a bit of support for the smaller one. And then the smaller one's CEO left due to health reasons, which was very sad. And the larger organisation then became the effective back office for the smaller one. And after a while, they came to the conclusion that actually they didn't operate that far apart, and why were they two separate organisations? They could actually do this more sensibly as a single organisation and just merge it in together. It was interesting, the impact of that, because it was a staged merger, if you like, or a staged takeover, whichever way you want to say it. It gave some of the individuals, I think, a little bit more comfort in the process rather than it happening in a hurry. But it is very interesting if you look at the impact before of the two organisations separately, and then the impact afterwards of the one organisation combined. The combined organisation was more impactful. One of the interesting implications and the pain points that they had in the middle was that previously both organisations used to go to funders for funding and be funded. And when they merged into one, they were only able to go as one organisation. And that was very frustrating for a period of time until they were able to better show those funders that they were actually more impactful. And I think that, to me, is the key, is being able to demonstrate how impactful an organisation actually is. Any donor wants their money to be put to the most use for good. That's why they're giving it. They're giving it for good. So if you can show me that you can do 3 times good compared to someone else who can only do 1 times good with my same dollar, I'm going to give it to the one that can do 3 times good. And I think, that's the really important message out of it, is how well are we even measuring impact? Have we got our head around what impact looks like for our organisation? And then the challenge of how can we communicate that?
Well, that's a really good place to tie it all up, actually, and that's the common theme, is that if you can demonstrate impact and prove that you're needed and you're doing good, then you should be okay. And I think the 3 things that I take out of this whole session, Craig, is first of all, if you've got reserves, think very carefully before you apply for the wage subsidy. Secondly, be very careful about documenting your assumptions around being a going concern, and that is the thing that will be tested against post this period of lockdown. And third, be on top of the drivers, and they're all around us globally and in New Zealand. And you mentioned unemployment as a huge factor that is going to be different to the GFC. And the final kind of upbeat note, I think I like the Warren Buffett quote that it's only when the tide goes out you can see who's swimming naked. Well, some of us may be swimming naked, but there's a lot of people with towels around wanting to wrap us up and look after you. So there is a future if you can prove that you're needed and you prove you've got impact. We'll put a towel around your naked body and keep on with the good work we do. Craig, thank you so much for that. Very useful for all of us, I know. I mean, we've had a stellar turnout of 39 people at one stage. And there will be a recording of this that we'll distribute. We'll also distribute some notes, bearing in mind, of course, the disclaimer that Craig is not giving you financial advice. He's giving you Craig advice. And it comes from many, many years of experience of working in our sector, inside our organisations and watching from the outside too. So incredibly useful. And thanks everybody for coming along. We're all Zoomed meetinged out, but put it this way, these are better than having to kind of, go somewhere for a big meeting. And I actually think we're getting more impact and value for our dollar with these Zoom meetings. So thanks everybody for turning up. We'll have another one next week until we get out of this strange isolation phase. So all the best.
Josie, can I make one comment? As I depart, thank you very much for the opportunity, and it's on the, I guess, a slide that I've got there as well, which is a favourite saying of mine from Charles Darwin, that it's not the strongest of the species that survive, nor the most intelligent, but the ones that are most responsive to change. So those that can be flexible through this and open-minded are the ones that will thrive the most.
Brilliantly said. Thank you. All right, guys, take care. Be safe. We'll be in touch.
Thank you.